Hello, friends. I hope you and your family are safe and well. Today, we are going to study objectives of buyback of equity shares. Now, buyback of equity shares, it is one of the important topic model in our TYBcom semester 5. Now, there are number of questions university will ask, practical problems, some theoretical questions, and some objective questions also come. The basic things for this particular video lecture, so we have to focus on objective questions on buyback of equity shares. So let us discuss some important objective of buyback of equity shares. I am sharing my screen. Buyback of equity shares. We will discuss today multiple choice questions. In our exam, they will ask multiple choice questions. So how they will ask buyback of equity shares, that we are going to learn. I am reading one by one questions and options. Then we will select the one answer. First question: buyback of equity share is permissible to the limit of dash in a year. Option A 30%, option B 25%, option C 10%, option D 20%. So here answer will be 25%. So buyback of equity shares, it is permissible to the limit of 25% in a year. Second question: amount payable on buyback cannot exceed 25% of the dash. Exceed means more than 25%, cannot more than 25% of dash. Options are: option A capital premium reserves shareholders funds, option B debentures, option C secured loan, option D none of the above. So here appropriate answer is capital premium reserves shareholders fund. Question number third: for calculation of limit of capital and reserve, the amount as per dash should be considered. Option A profit and loss account, option B trading account, option C latest balance sheet, option D none of the above. Here answer will be latest balance sheet. Question number 4: the post buyback debt equity ratio should not exceed dash. Here it is a 2 is to 2, 2 0, that don't consider it as 0. The 2 is to 2, 1 is to 2. Again here don't consider 0, 1 is to 1 and 2 is to 1. So which one is the appropriate answer? The appropriate answer is 2 is to 1. Please don't consider the 0 here. Okay, so here always after buyback debt equity ratio should not be more than 2 is to 1. Fifth question: the buyback must be completed within dash months from the date of resolution. Option A 3 months, option B 2 months, option C 12 months, option D 6 months. The appropriate answer is 12 months. Next question number 6. The company should open dash account with the bank to provide fund for buyback. Option A fixed deposit, option B saving account, option C current account, option D escrow account. So here answer is escrow account. Now friends, escrow account is a third party account. Whenever, say example, A company take over the B company and A company doesn't want to give full amount of their consideration. There, for that purpose, they can open escrow account, third party account, and they deposited the amount to the escrow account. Third person is the escrow agent between the company A and company B. The third party account or escrow account open with the bank to provide fund for buyback. Next question. Buyback of shares can be of dash paid up shares. Option A fully, option B partly, option C fully subscribed, option D none of the above. Here answer will be fully paid up shares. Next question number 8. The company dash issue class of shares which are subject to buyback. Option A equity, option B preference share, option C A and B, and option D none of the above. So here buyback always equity shares. The company issue equity shares for which are subject to buyback. Question number 9. Capital redemption reserve is to be created to the extent of dash. Option A retail value, option B market value, option C face value of shares, option D none of the above. Here answer will be face value of shares. 10th number question. Securities premium can be dash for calculating limit. Option A remove, option B deducted, option C included, option D none of the above. So here appropriate answer will be included. The security premium also included for calculating the buyback limit. The buyback of shares can be effected by purchase from dash. Option A wholesale market, option B broker market, option C open market, option D none of the above. So here Appropriate answer is open market. Question number 12. The buyback of share is governed by section dash of Companies Act. Option A 75, section 75. Option B section 28, 78. Option C section 80. Option D section 68. So appropriate answer will be section 68. Section 68 is governed for buyback of equity shares. Now friends, next question. Buyback of shares is for dash class of shares. Option A preference shares, option B equity shares, option C both A and B, and option D none of the above. So here answer is equity shares. The buyback of shares always equity shares. Fourth number, partly paid up shares dash be brought back. Option A can, option B will, option C cannot, option D none of the above. The answer is cannot. Partly paid up shares cannot be brought back. It means always fully paid up shares can be brought back. Question number 15. The amount paid in excess of face value of shares brought back should be debited to dash. Option A dividend equalization reserve, option B general reserve, option C revaluation reserve, option D premium reserve. The answer is premium reserve. Question number 16. The buyback of shares up to 10% of capital can be authorized by dash. Option A directors, option B shareholder, option C capital, option D none of the above. So here appropriate answer is directors. 17 number question. Dash can authorize buyback of shares between 10% and 25%. Option A share capital, option B debentures, option C directors, option D shareholders. So here appropriate answer is shareholders. Shareholders cannot authorize buyback, can authorize, cannot, not a call, cannot. Shareholders can authorize buyback of shares between 10% and 25%. Next question number 18. The shares which are subject to buyback should be physically dash. Option A reissued, option B ignored, option C destroyed, option D none of the above. It's very important question. It should be destroyed physically. Next, the buyback of shares results in reduction of dash capital of a company. Option A nominal, option B paid up, option C fully paid up, option D none of the above. So here answer will be paid up. The buyback of shares result in reduction of paid up share capital. Question number 20. Authorized capital of a company is dashed to the extent of shares brought back. Option A, disclose. Option B, reduction. Option C, not reduce. Option D, none of the above. Answer is not reduce. Authorized capital always we can say that registered, and it is not reduced, it is not higher, it will not be increased, it will not be reduced also. It is always stable, it is a constant, because it is a registered capital, it should not be reduced. Question number 21. Buyback of shares leads to dash in the EPS, earning per share. Here answer is disclose, decrease, increase, none of the above. So answer is increase. Answer is increase. So buyback of shares leads to increase in the earning per share. I, I hope you understood these things, what we are learning right now, because objectives give maximum marks. If you want to score 100 out of 100, you should focus on practical problems, theory, as well as objectives. You should write appropriate, proper objectives. Therefore, you should learn all objectives properly. You should understand the basic concepts. You should know about the what will be the answer, and that you should write in your exam. We have to continue right now. Buyback of own shares requires permission from dash. Option A, shareholders. Option B, articles of association. Option C, directors. Option D, none of the above. So here answer is articles of association. Question number 23. Buyback of shares may be from dash lots. Option A, odd. Option B, big. Option C, large. Option D, none. It is always odd lots. Discount on buyback is credited to dash account. Option A, capital reserve. Option B, revaluation reserve. Option C, profit and loss account. Option D, capital reserve. So here answer will be capital reserve. Next question, question number 25. Investment allowance reserve is a dash. Option A, proceeds of fresh issue. Option B, paid up capital and reserves. Option C, securities premium. Option D, free reserves. The answer is free reserves. Question number 26. Buyback of equity shares. Conditions are specified by section dash of the Companies Act. This question is repeated again, but you should know about the answer. Option A, section 66. Option B, section 75. Option C, section 81. Option D, section 68. So what will be the answer? The answer is section 68. Buyback must be authorized by memorandum of association, auditors of the company, central government, articles of association. It is always articles of association. Debt equity ratio after buyback must not more than. It is also repeated. It is answer is 2 is to 1. Don't consider the 2 is to 0 1. It is 2 is to 1. After completion of the buyback, the return must be filed. Return must be filed with dash. Option A, Register of Companies. Option B, SEBI. Option C, Registrar and SEBI. And option D, Register of Stock Exchange. The answer is Registrar and SEBI. Here we should open, company must open dash account to comply with the obligations of the buyback. You know that it is escrow account. Buyback expenses may be treated as dash expenses. Option A, debenture. Option B, revenue. Option C, share capital. Option D, none of the above. The answer is revenue expenditure. Revaluation reserve is not a dash. Option A, free reserve. Option B, general reserve. Option C, revaluation reserve. Option D, none of the above. The answer is free reserve. Now 33 number question. Discount on buyback is transferred to dash account. It is very important question. Option A, capital reserve. Option B, profit and loss account. Option C, general reserve. Option D, none of the above. So here discount on buyback is transferred to capital reserve account. Now next question. Question number 34. Capital redemption reserve need not be created when the buyback is not out of dash. So it is, if it is not on out of divisible profit. If it is not out of divisible profit, no need to create capital redemption reserve, because divisible profit always transferred to sharer account, that is capital redemption reserve. If the buyback is not from divisible profit, so no need to create capital redemption reserve. Friends, I hope you understood this particular module. There are number of questions they will ask to you. You should know the answers. These are the basic concepts, basic rules which are there, and that you should study regularly, because exam is very nearest and you should study regularly. Okay, I hope you understood this. Bye. Thank you.